What is up, Scan fam? Welcome to episode 23 of the Crypto Club podcast. We are here with Dennis and Gons as always.
Hello, hello.
Hello.
All right, been an exciting week at CoinScan. We just released perhaps our biggest update yet. We can finally say that the puzzle is really starting to connect here. We'll just briefly go over some of the new things going on. We'll take a look at the scan token here. So click on the socials tab. You'll be able to see we actually present a live Twitter feed. And we do this for quite a few tokens. If a token that you see is not supported here, just go ahead and email us at contact@coinscan.com and we will get that situated. Well, of course, we've got all of our classic tools right here. Let's see, we've got a whole new user interface. As you can see, we've got light mode, default, and pro. Really some good options to cater to exactly what the user is wanting. We got a cool little markets page here where you can see all of the different markets for a token. A whole lot of other stuff that we won't dig into right now, but make sure you guys join the CoinScan community. Check us out on the Telegram. We're happy to help out with any questions, and we look forward to, pushing this even further. But without further ado, let's kick off this episode with looking at the charts. So what is the crypto market telling us this week? It's telling us that, we're not dead, which is, a refreshing feeling. So looking at Bitcoin here, we dropped it down quite a bit from where we were trading at the previous week, around that 23.5 area, dropped down to around 21.5, and we actually broke 25 yesterday, topping out around 25,200, right below 25 right now at 24,829. Looking good. We're seeing some relief in the markets. Taking a look at ETH, following a very similar trend. We're actually kind of breaking out of this range that we were in, which is good to see, sitting at 1711 on ETH. And something I want to point out that's very interesting is this entire up move has been while the dollar has been moving up as well, which is typically not something you see in crypto. Generally speaking, when the dollar falls, crypto rises and vice versa. However, this whole move up has been in congruence with the dollar rising. So, an interesting note there. What do you guys think?
Love it, man. The important part here is like what you mentioned, right? Because we're essentially uncoupling from, most like hard risk security investments, like the stock market, for example. So I like it because typically, especially the past, I want to say, year or 2 years, just every time that the stock market takes a dip for whatever reason, Bitcoin just wants to follow along like a sheep. And so this is really surprising. I'm really happy about it. And if we can continue past this, I think we'll be in a really good spot. So time will tell. Obviously, it looks like we're coming up towards that all-time high from yesterday. So if we can at least maintain that or break past that and hold it for a bit, I think we might see some really nice movement in the next few days.
Yeah.
Great by Gons and Evan. Overall, it's definitely refreshing, like you said, Evan, just to see the markets kind of be stabilizing a bit more and going to the right direction. It's been definitely a little bit depressing on this side to see all the losses and now the recovery. It's making a lot of the folks not only happy, but also motivated to continue in this space. And I think it's very refreshing.
Right. It's a nice breath of fresh air. I will say, I wouldn't quite say we're decoupling from major securities yet. As far as risk securities, looking at the S&P 500 right here, it's been doing quite well. It bounced off of that 3,500 level, and it's been trending up. I'm sitting at around 4,000 right now, kind of breaking out of this downward channel. But I digress. We'll just have to see how this plays out over the coming weeks, but it definitely has been nice. So we'll get into our first story here. So the SEC charges former NBA player Paul Pierce for crypto promotion. Now, if you guys remember back to the Kim Kardashian episode of the Crypto Club, I believe she had to pay like $1.5 million for her Emacs promotion. and that was SEC fine. So here we see another celebrity getting tangled up in the Emacs currency situation. And, it's been interesting that we haven't really heard anything about the Emacs project creators. We've only been hearing the SEC coming after the promoters. But anyways, we'll get into the story here. So Paul Pierce made and promoted false, misleading promotional comments on Emacs, a token offered and sold by Ethereum Max on social media platforms. Pierce did not disclose how much he was paid for the promotion during the trial. However, the SEC order found that he was paid more than $244,000 worth of Emacs tokens to promote the token on Twitter. Instead of admitting the charges, Pierce opted to settle the charges by paying $1.4 million imposed on him by the law court as disgorgement, penalties, and interest. Emacs in particular is extremely volatile. It's one of those DeFi tokens that really moves quite heavily. So I wonder what this $244,000 is valued at. Is that the price of the tokens when he received them, and then he tweets and it 4x's and now it's worth $1 million? Is that what he sold it for? I really don't know. Doesn't talk about that.
That's a great question, because I feel like that is a very big gray area. Like you said, Ethereum Max moves like crazy, and so it's also interesting to see if the SEC was looking at that 244,000 in the beginning when it was actually unleashed, or was it when he sold it? So I think that's a great point, and I think hopefully somebody kind of dives deep into that, because that's a big question mark there.
Right. Just generally rationalizing it, I would imagine that was the price at the time that it was sent. And of course, if he receives $250,000 worth of a token and then he promotes the token, obviously the price is going to go up. So anyways, the SEC order found out that the former NBA player violated the anti-fraud and anti-touting sections of the federal securities laws. These provisions dictate that promoter must disclose all material information, certification of reports, and financial statements by executive officers, the Exchange Act Section 10B and Rule 10b-5. The provisions also cover liabilities for security offerings, false and misleading information, and control person liability. The SEC investigation is being conducted by various SEC officers, including John A. Daniels, Pamela Sani, and an officer from Enforcement Division's Crypto Assets and Cyber Unit, Amanda Rios, who found enough evidence against Pierce. Pierce did not admit or deny the charges, but he agreed to pay $240,000 in disgorgement and prejudgment interest and a penalty of $1.1 million. He also consented not to campaign for any crypto asset securities for the next 3 years. Same thing happened with Kim Kardashian. She cannot promote any cryptocurrencies for the next 3 years. I think that's a little bit of a light sentence as far as the promotion of crypto. It's in the world of crypto, there's really not many things that are regulated. And I guess unless she wants to get those documents and talk about how much she was paid to promote, I don't see a way for these celebrities to promote crypto without, encountering situations like these.
Yeah, and why 3 years? It just seems so weird. Like, why 3 years? I feel like it's like a standard kind of just sentence that they just say or put into these kind of deals.
Right.
But yeah, they can make way more than, Paul Pierce could have made way more than $1.1 million on this pump potentially.
Yeah.
We don't know the details and all that, and that's still up in the air. But I think just paying that minimum fine there and just for 3 years not being able to do it, I feel like is definitely super light, in my opinion.
Yeah, it's
Yeah.
like, some of these companies, they'll do malicious business practices, make $1 billion, then they get fined $100 million. So it's more PR for the SEC than it is a true punishment.
Yeah, and I was gonna say too, it might be a situation also where these are just like first time offenses, and as if they commit like another violation in the future, then it may be like a more extensive punishment. But definitely there is something to be said about the lack of like repercussions for this kind of stuff, especially on large scales like this.
Yeah, and I wonder, like, if someone like this didn't have the money to pay those charges, how long they would be sentenced in jail, assuming that would be the case. Anywho, we'll get on to our next story here. So the SEC has finally charged Terra founder Do Kwon for fraud. This is a big win for crypto. This is possibly the worst event, maybe aside from FTX, that has happened within the bear market. I would say those two take the cake for biggest black swan events. So in a statement released today, the U.S. Securities and Exchange Commission has filed charges against Terra founder and CEO Do Kwon for fraud. The regulator alleged Terraform crafted a multi-billion-dollar crypto asset securities fraud, according to their statement. The creator of TerraUSD and Luna, Kwon, and Terraform Labs reportedly set in motion a fraud scheme starting on April 2018. According to a CNBC report, Kwon used both stablecoins to raise $1 billion from investors through the offer and sale of an interconnected suite of crypto asset securities, prompting the charges. So the SEC's complaint alleges that Terraform and Kwon marketed crypto asset securities to investors seeking to earn a profit. The statement noted, additionally, stating Terraform Labs operated by repeatedly claiming that the tokens would increase in value. That right there is a massive red flag for the Howey test, which is, the test that deems whether something is a security or not. Do Kwon was certainly promoting returns on these crypto assets. It's obviously a sealed case. He made off with millions of dollars, which we'll actually get into in our next story. Caused massive pain for so many people.
Yeah, I personally think that this type of event was far overdue. He should have been charged a tiny bit earlier. But overall, again, this is the sifting process. There's going to be a lot of bad actors and false promotions and breaking rules. And having these types of events happen early on in this nascent market is going to be very, very important. Kind of setting the stage for new and upcoming projects, and overall just create more regulation that is going to help new projects kind of evolve.
100%. So we'll kind of get into our next story here. It builds off of the previous one. So this is on Yahoo News, saying that Do Kwon tapped a hoard of 10,000 Bitcoin via a Swiss bank, says the SEC. So crypto fugitive Do Kwon and the firm he founded transferred over 10,000 Bitcoins out of their doomed project and turned some of the tokens into cash via a Swiss bank, the SEC has stated. So the allegations are in an SEC lawsuit accusing Kwon and the company Terraform of fraud over the wipeout of digital currencies he created. The SEC said the scheme led to losses of at least $40 billion. Kwon and Terraform put more than 10,000 Bitcoin into a so-called cold wallet that doesn't sit on any digital asset exchange, according to the complaint. They've been periodically transferring Bitcoin from the wallet since May last year, sending the assets to a bank in Switzerland and converting the tokens to cash, the SEC said. It didn't identify the financial institution. Between June 2022 and the date of this complaint, over $100 million in fiat currency has been withdrawn from that Swiss bank, the agency alleged Thursday. Kwon developed the TerraUSD stablecoin, which is meant to have a constant $1 value via a mix of algorithms and trader incentives involving a sister token, Luna. The edifice blew up in May of 2022, exacerbating a $2 trillion crypto market rout and contributing to the downfall of a range of digital asset outfits. It says $100 million has been cashed out so far, and this is obviously over a timeline of steady withdrawals. I wonder how much there still is. Let's see. Let me pull up my calculator real quick. So we got 10,000 Bitcoins, and that's currently at around $25,000. So, current value is $250 million. So yeah, there's got to be plenty of Bitcoin still in that cold wallet.
And then how many wallets we don't even know about. So
right.
I think, again, bad actors are going to keep doing what they got to do to get more and more money. And I'm sure the story is going to unfold, but overall, let's see how this kind of turns into more regulatory or some kind of rule set in place for specific wallets, cold wallets that are connected to these organizations, and seeing, I don't know, there's going to have to be a little bit more clarity on how to proceed.
But yeah, good to see Do Kwon, getting these charges. The real world is catching up with him. This is something that crypto has been advocating for ever since the downfall of Terra. And we'll get on with our last story here. So, U.S. authorities close in. Binance is expected to pay penalties for regulatory probes. Major crypto exchange Binance will likely pay monetary penalties to settle current investigations by the U.S. authorities, the Wall Street Journal reported, citing the firm's chief strategy officer. According to Patrick Hillman, the company is working on patching the compliance gaps and mistakes made earlier in its existence, but it is likely that it will be asked by the regulators to pay the fines nonetheless. This may be the way for the exchange to end the regulatory and law enforcement investigations into its business. Hillman was cited by the Wall Street Journal as stating that Binance is working with regulators to figure out what are the remediations we have to go through now to make amends for that. The outcome will be likely a fine, could be more, we just don't know. That is for regulators to decide. These above-mentioned gaps occurred due to Binance's fast growth, the firm's chief strategy officer argued, especially since the business was started by software engineers who were not knowledgeable about the rules and laws that address the risk of bribery, corruption, money laundering, and economic sanctions. Per Bloomberg, citing Hillman, the company's initially small staff was spread too thin as the exchange was working on international expansion, compliance, and cybersecurity. It's a tremendous burden. As a result, there were some gaps in our compliance system in the first 2 years. He claimed that the gaps have since been closed. As for how much they'd have to pay, or when for that matter, Hillman could not say. However, per the Wall Street Journal, he added that Binance is highly confident and feeling really good about where those decisions with the U.S. authorities are going. It will be a good moment for our company because it will allow us to put it behind us. If I'm not mistaken, Binance has already had to pay some regulatory fines in the U.S. I'm rather certain that they, have internationally as well.
I just feel like if you build so early, like they were really this kind of big juggernaut in the space, and when you're kind of leading and creating this path, you will break rules. Like there's just no rules kind of set. So at the same time, yes, I think there's some potential corruption, things that didn't happen for the best reasons, but I think them trying to fix the gaps and trying to pave this route for the rest of the kind of community and industry is huge. So kind of hats off to them for that as well.
For sure.
Yeah, it's like, you're taking the path and you're having to clear the path forward yourself. Like obviously you're gonna, stumble across different things and you're gonna trip along the way because you are like first mover in that market. So it's expected, and as long as they're fixing it and remedying it, it should be a good thing for the future of crypto, because now they can be used as an example of like, hey, what to do, what to follow as far as regulation, stuff like that.
Yeah, no, totally. And it's so complicated, right? Especially dealing with such a new industry, and on top of that, a new financial industry. The navigating it is a minefield. Especially like a small team of software engineers spread thin. Just realistically, that is not the infrastructure that you need to, truly navigate something of this scale in a regulated manner. But, it sounds like, according to Binance, they've closed those gaps. They'll pay the remediations. And I don't know. I don't think that much will come out of this other than some fines.
They definitely took one for the team. I feel like a lot of these companies, like I mentioned previously, is just like they're taking a lot of hits and all these potential lawsuits in order to provide more clarity for the rest of the space. So somebody has to do it. Otherwise, there will never be any regulation or people even thinking about it. So all these events, whether it's good or bad, I think overall is going to create a better and clearer path for other folks to continue to build in this sector.
For sure. Yeah, well, that wraps up this week's Crypto Club. Thank you, everyone, for tuning in. Don't forget to go check out the CoinScan community. Everyone is loving this new update. Also, let us know what you think of this episode in the comments. Happy to hear some feedback, maybe some things you want us to talk about next week. And we will see you next Friday.